Welcome back. I'm Justin Conoco, and in this video, I'm going to be going over all of the real estate statistics for Southwestern Ontario, the trends we are seeing, boots on the ground. The market is like a roller coaster. So this is the channel where you're going to get all the goods unfiltered. I'm going to bring you behind the curtain, show you some of our systems data you cannot access online, give you my interpretation of it, and help guide you. If it's your first time to this channel, my name's Justin. Like I said, I own Prime Real Estate with my beautiful wife, Shannon. We operate out of Southwestern Ontario, Canada. Our home base is London, Ontario, smack dab in the middle, but we cover all the way from Kitchener down to Sarnia, Lake Huron to Lake Erie. But I'm actually going to pull some statistics from a higher level. So it doesn't matter what market you happen to work in. I promise you, we have boots on the ground there. We have one of the best referral networks in the country. So if you're looking for an agent in your market that is dialed in on the stats, let us know. We will find them for you as well. If you happen to catch us on the live stream, just jump in the comments. Let us know what you want to know about your specific area. Ask any questions. I will try and answer them live, but let's jump right into the actual statistics. So first, I'm going to pull up InfoSparks. So this is a software that we have access to that will give us some insights, sales prices, new listings, home for sales, so on and so forth, in a very large catchment area. So this should show you some trends. And the first thing we're going to talk about is the sales price. Obviously, it's increased from 2021. All of ITSO is the entire ITSO board, London, and then Sarnia. So these three stats should show you what's happening. And obviously, we're up last year, 28.5% for ITSO, 32.7% for London, and 107.8% in Sarnia. Sarnia is an opportunity for growth. Their average price point is $570, which seems very affordable to some people, but I think the secret's out. Now, check this out. When I actually go back to 3 years, 2019, you can see how the growth trajectories have kind of matched, but you also see how you have an erratic market like Sarnia that spiked for different reasons at different times. Now, I'm also going to go to new listings, and I'm going to go back 3 years. I want to show you this pattern. In February, you saw new listings down. You saw a big spike up to May, which would be the spring market. You saw it going down, down, down back to December, up in March, so on and so forth, right? This is the trend that a lot of people are looking at. And if I go back to a 5-year term, you're definitely noticing the drops in January, December, January, December, December. These are trends that you should be watching if you're in the real estate market. And I'm going to give you a little bit more insights in a second. I'm also going to go back to months of supply. This is another very important statistic, meaning if we didn't list another property today, how long would it take for us to run out of inventory? And you can see right about here, we're at about a half a month's worth of inventory. So if we stopped listing properties today, we would be out of properties to sell in about 15 days. Now watch this trajectory though, because from December till now, you can see it kind of creeping up. We were at 0.2 in London, 0.3 in ITSO, in 1 month of inventory in Sarnia. And you actually see it increasing, which means the number of average days, or sorry, the month supply of inventory is decreasing. So it seems like as inventory decreases, it becomes more and more competitive going into the spring market. And then the percentage of list price is that number that you're all watching as you're reading the news saying, oh my gosh, I can't believe that property sold so much more over asking price. This percentage over list price is where people are pricing properties versus where they are selling. You need to understand something. List price in this market is a marketing tool. It's not an indication of where the house is going to sell. You are going to see properties massively underlisted that sell for way more than asking price, but that was intentional because they're trying to bring more people to that property to yield more offers, to ultimately yield an emotional buying situation and way above asking prices. So you need to understand, if you're in this marketplace, you have to be super dialed in on the actual value of the property. Another insight that I do want to share with you is make sure you're working with ethical professionals, both on the mortgage side and the real estate side. They should be working with you to get a sense of what that appraisal value of that property is going to be. Because here's something not a lot of people realize. If you write an offer on a property, the bank's told you they're willing to lend $1 million to you, but then that property underwrites at 700K and the bank says, we only think it's worth 700. I don't care. You wrote an offer for $1 million. You have to pay the extra $300,000. Because you're pre-qualified does not mean that you are approved for that property. There are real estate agents out there that don't understand this, let alone lenders that aren't necessarily explaining it to their clients. So make sure you understand the full scope of what it means to be signing on the dotted line. Another terrifying situation I heard of recently was where a new home buyer went right to a builder site, got all caught up in the hype of it, paid over asking on a property that they were not qualified on. They couldn't get their financing. They tried to blame the builder and say that it was the builder's fault for not having them qualified or allowing them to put a financing condition. You need to understand, you need to have representation that's explaining to you the process. It's absolutely critical. So I'm also going to go to the price per square foot. You're going to see that increasing as well. A lot of people want to know what it costs to build or buy a house these days. London's about 468. All of Itzo's about 559, and Sarnia is at 286. Not a lot of inventory in Sarnia, not a lot of land available either, which is going to be very interesting to watch over the next couple months. I'm going to flip back over to L-Star. I actually pulled some stats super quick for you guys because I wanted to show you this. So this quick CMA is a summary of all the listings that sold in the last 14 days, because all that data I just showed you is about 30 days old. This data is about 14 days old. And you'll also notice if I go to the average list price to sales price ratio, you're at about 111%. The highest above asking price was 139%, and the lowest is 0. Average days on market 13, so almost 2 weeks on market. The longest days on market was about 61, and the minimum was 1 day on market. I bet you that property was sold before it was actually posted. Typically, you're seeing around 7 days on market. That's more or less the rough numbers that we're seeing. So I also want to pull up another great resource, the lstar.ca. So this is the London St. Thomas board. I like London as a test market for the other markets. It's not necessarily going to apply to every single town you're in. Real estate is hyper specific, but I like looking down here and seeing how things are trading. Central Elgin, the benchmark price is about 813. London East 651, London North 879, London South 742, Middlesex Center 1,072,000, St. Thomas 663, Strathroy Caradoc 840, L-Star as a whole is going to be 749. So L-Star is a very big jurisdiction of properties, but that should show you the swings in pricing. And yes, those country properties are yielding over $1 million. I have a client of mine that we're searching for that acreage backing onto Bush, the dream, and it's likely going to be in that $1 million to 1.25 range. We're also noticing another trend. So let me just pull up Google Earth here for you. We can do this live. And if you're in the chat, feel free to comment. Let me know you're here. I'm actually happy to answer any questions live. If you haven't been to this channel before, hit that subscription and notification button. Always happy to meet new people and let me know where you're from. As I mentioned, we have an incredible referral network as well. So if you're looking for an agent, send me an email, info@primebrokerage.ca, and I will get you taken care of. Let me just throw that there for you. So this is the London market. The L-Star jurisdiction actually covers a territory about this big. You actually have Sarnia, which would be Sarnia and Lambton Shores. Those two boards kind of overlap a little bit. And then you have TREB, the Toronto Real Estate Board, that kind of comes into this territory. But what you're noticing is the official plan for, say, London area is very, very close to getting maxed out in terms of land acquisition. So we're seeing a ton of people looking at the secondary and tertiary markets. We have a number of projects, Port Stanley, all the way to Grand Bend, all along the coastline in a lot of these small towns. If you happen to know anybody with a farm or land to sell that you think would be good for a builder, let us know. We're offering free appraisals for anybody that has anything that they're curious about. Well, I wonder what it's worth today, given it's been in the family for a very, very long time. But I think you're going to see development continue. If you look at the way that Toronto grew out of the GTA, a lot of these towns, if you look at the last 15 years, a lot of these have been absorbed into the GTA. A lot of that's going to happen in this whole southwestern pocket. I think you're going to have London merge with St. Thomas and Port Stanley. It's already happening. And you also see Arva, Ilderton, Lucan, all Mount Bridges, Kamoka, all kind of becoming part of that GLA or the greater London area by proximity. Sarnia has a really cool waterfront plan that they unveiled last winter. And I think with the nice weather coming down the pipeline, you're going to see tons of investment along this coastline. If you're privy to what's happening in Grand Bend, it is insane. Drive down the main strip, the institutional development happening along those cores. You're seeing the average price per square foot. You're seeing things selling for 30,000 plus for a tear down on the water. Not much inventory down there, but we have a bunch of off-market stuff coming. Just make sure you're signed up to our newsletter. That's where you're going to get a lot of that information. A lot of impending development. Paul Pateo, Medway Homes, they're crushing a big development in this area. One of our clients is doing a really cool rehab of the motel in this area. Another close friend of the family is actually doing a really cool development just across from the Oakwood. And there's 3 or 4 other surprise projects that we're privy to happening in this area. But this is why it's super important to be working with somebody who has their ear to the ground, is knowing what's happening before it's happening is how you get in the know. Port Stanley as well. We just crushed an amazing sale backing onto the ravine in this area and sold that over $1 million. There's a bunch of new products coming. We have another batch of condos that we're going to be releasing. Really excited for summertime. We have a renovation project coming pretty close to the beach. That'll be coming closer to like May and June area, but we're very, very active in this market as well. So again, the reason we do these market updates are just to give you a super high level rundown of what's happening in the marketplace. I know a lot of people are wondering what's going to happen with the interest rate changes and what's coming down the pipeline. What I can tell you is that I have a crystal ball and that I can tell you what's in the future. What I can tell you is we've seen similar patterns happening over the last year. If you look at the data from the last March, April, May, it was absolute mayhem. I started right in January, ran right until about May. There was a big drop off in May where all of a sudden people were going away for long weekends. They could travel for summer. They lifted restrictions. And it kind of ran like that. And people were humming and hawing saying, oh my gosh, all these properties, they weren't selling and they increased their prices by 200,000. I can't believe these sellers, they're so unrealistic. Well, these sellers are the same people that are doing the same thing now because they priced their houses aggressively. Maybe interest dropped off a little bit because of spring break or the long weekend. They increased their prices. And rather than sweating it out and just dropping their price, they got what they wanted. It just took them an extra 30 days to do it, right? From a public perspective, if you're watching what's happening now, you're also noticing, well, last week was like that. And then all of a sudden at the end of last week, interest just spiked again and a whole bunch of stuff sold for well over asking price, record setting prices in different neighborhoods. So it's really understanding the minutia, what's happening in the marketplace, not listening to the crowd. I would say if I was going to give you advice from a buying perspective, hedge your bets and don't make a purchase based on an assumption of passive appreciation. I think a lot of people will run around saying, oh, the market's always going to continue. It's always going to be amazing. But if you're making your purchase based on the fact that you can buy and hold that property, what the property is going to be for you for the next 5 or 10 years, fantastic. But make sure you have a power team and you are working closely with them to establish that plan. If you're gambling with real estate and buying and selling and doing it super, super quickly and just hedging on an amazing market all the time, that's a little bit more risky, and that's okay if that's what you want to do. But I just want to make sure that we're giving the best advice possible. We work with some of the best lenders, some of the best lawyers, and definitely some of the best partners on the planet. But every single day when we're consulting with our clients on the acquisitions they're making, we're looking at it from all angles. We're looking at it from the angle that the light switch could go off tomorrow. But at the same time, when everybody was saying that when COVID started and it went the complete opposite way, we want to make sure that we're advising our people to make good decisions. So if the market does increase, they're in the best position for success. And every case is different for every single buyer. But like I said, we just bring you the stats so you can see what's happening. I know we're going to pump another one of these videos out in about 2 weeks. We're going to try and bring on some more experts in the commercial, investment, luxury, recreational, new development space. Let us know what you want. Drop it in the comments. Tell us what type of information you want us to source, and we'll definitely bring that to you. But for now, I'll catch you on the next episode of the Prime Market Update. Take care.